Oh, welcome back everybody, your typical bull here, and today we're going to talk about one of my favorite indicators, and that is the TTM squeeze. This will allow you to find periods of extreme volatility compression that usually release in a very large way, and it can predict some pretty huge moves. But before we get into it, please do remember to like, subscribe, and comment, and if this channel has helped you to become a better trader, please consider clicking the join button on your screen through the YouTube or subbing to the Patreon page down below. Alright, so the TTM squeeze is basically an indicator that's going to find periods of volatility compression. As you can see here, it is comprised of a histogram, which moves upwards and down, and we'll talk about all this stuff in a minute. And you've got some green dots and you've got some red dots, and this can be found on TradeStation, and TD Ameritrade has it for free. I'm not sure about TradeStation. This indicator was developed by a man named John Carter, who also has several other indicators that I like a lot. You can see a couple of them here on the screen. I've got the Moxie and the Ready Aim Fire indicator. Both of those are his. Alright, so what is the TTM squeeze? I'm going to load a drawing set I've created here. So basically, the TTM squeeze is Bollinger Bands, Keltner channels, and a momentum indicator, and that's pretty much it. Oops, wrong one here. Use set and apply, and I'll show you guys how to make this internals, TTM internals also. So basically, you have Bollinger Bands, Keltner channels, and this momentum indicator, right? So the momentum indicator is your histogram. As you can see, it's pretty much the exact same. Momentum follows the histogram. And when the Bollinger Bands contract, and you can see here is, we'll zoom in on one of these squeezes here. Right there. You can see here these red dots. This is when the Bollinger Bands contracts inside of the Keltner channels, meaning that this is in a very low volatility state. You can see here is where that happens, and it is here on our indicator, these red dots. And you can see as this momentum starts increasing and getting ready to fire off this squeeze, you could jump into this, and you can see here on the momentum indicator that momentum is indeed going up, and these bands are widening at the same time. So that squeeze will fire off when the Bollinger Bands start trading outside of these channels. You can see here, and generally that will follow a very large move. So you can see here that this was quite a large move. So when volatility compresses, it will generally continue in the direction of the trend when it does release that energy. So energy periods of low volatility usually are released in quite a big way, and you'll see that sometimes on strong volume, and it'll be a low volatility, nice tight trading range, and then these Bollinger Bands will be trading inside of your Keltner channels, and then it'll just explode in one direction or the other. So you can see that that moves quite. Here's a little mini squeeze, and we'll get into some rules and setups and stuff for these setups as well, and I'll show you guys some scanners that I have created to find these stocks that are squeezing, right? So let's go look at something else. Let me just pick a random ticker off of my list here that's got some decent moves to it. No, that's got no trading history. This looks like a fine ticker. We'll use this, right? So I'll show you guys how to make this TTM internals. So you click here on your studies, edit studies, and I will just remove everything, right, and then click apply. So this is my basic chart, and I have some things here. I have a couple of custom indicators, right? So what you want first of all and foremost is the TTM squeeze. See it here? Double click that. Now we're looking for momentum. And you just scroll down here and you find the momentum indicator. And then Bollinger Bands. And Keltner channels. Now you have those. You click on this edit, and here where it says midline, we're going to unclick show plot because we don't want the midline. It'll make it kind of ugly. Lower band will make all of these the same color. I like to make the Bollinger Bands a little bit thicker than the Keltner channels, so I make those at 2. Give them this nice blue color here for the upper and the lower band, and then you just leave everything else up here as default. Click OK. Edit your Keltner channels. Same thing, we'll make that, let's make those this yellow color this time. The average, you'll unclick show plot. Yellow color. Make them both the same color, yellow color. Leave those as 1 and click OK. And then click, I have a custom study set for that I call dual volume bars. It just colors the volume bars 2 different colors for buyers and sellers. And we'll put that here in the volume. And click apply. And that's it. This is how the squeeze is made up. As you can see, in a squeeze, here, did not mean to double click that, you can see that the Bollinger Bands are inside of the Keltner channels, and then that squeeze, this squeeze, see if you notice this squeeze here, it does not quite really do anything. Why is that? Because the overall trend in this stock up to this point is up, right? So things that are in an uptrend do tend to continue that uptrend. Objects in motion tend to stay in motion. There are exceptions to that, and you can see that by looking at these histograms and things of that nature. This does actually fire off eventually to the downside a little bit, but it takes it a few minutes. Several extra bars, right? So this squeeze here, you can see, let me just draw a box around it. This is kind of your original squeeze area, so it doesn't do anything. The longer these things stay in compression, generally, the bigger the move is going to be, but I tend to stick to squeezes personally that are trend following, so I'm looking for only upwards momentum, unless like there's been some crappy news or something coming out and other reasons for me to assume that this is going to down. Maybe it's respecting the underside of a major moving average or something of that nature, and this does eventually fire off to the downside. So you can see that here. Here's your next squeeze, and then it fires off. You can see momentum is moving down. But if you look here at your momentum indicator itself during this squeeze, it's not really doing much, right? It's sideways, sideways, sideways. And then this one here is actually giving you a clearer movement. When you come down, here's a huge red candle, and then that squeeze fires all the way down to here, right? And you can see these dark red bars indicate decreasing momentum, and then these yellow bars indicate increasing momentum, but it's still below the 0 line. So generally, you want to try and, once those bars start to turn around, right, is when you would exit your squeeze plays. And a squeeze will generally last somewhere between 8 to 10 bars. So on a daily chart, you've got 8 days. So you don't want to hold it the whole time because it's not a science. 8 to 10 bars is just a general rule of thumb for a squeeze and how long they last. And that is coming directly from the man who invented the indicator. And here's another squeeze. Got your red dots, nice flat momentum, and then this one fires up to the upside. But if you see, it lasts here 1, 2, 3, 4, 5, 6 bars, and then earnings. Of course, you don't want to hold these through earnings because those are shots in the dark on any day, right? So let's find something that's actually trending nice and go over some more examples of the squeeze here. And you can use other indicators as well in confluence with this, or price tops, price bottoms. Here's a nice squeeze, right? You've got a solid uptrend, and then it starts trading sideways, compressing, and you get two here right in a row. See, there's your squeeze, and it does come down some, right? This is where it fires. It fires off down here a little bit, but then that trend continues, right? Same thing here. You see another squeeze in this area. Nice flat, low volatility price action. And then here's your squeeze. And that first squeeze fires off. Boom. We go into a second squeeze. And then that second squeeze gaps down, of course, on earnings. Not going to tell you how to play earnings. You figure that out by yourself. Just going to keep looking at some charts here. Snapchat. We are in an uptrend. Here is your period of low volatility. Sort of a breakout in this area. Momentum is increasing. And then 8 to 10 bars later, here's your top. Nice solid squeeze there. Again, here is another one that fires down a bit. And we are currently in a squeeze on Snap now. You see it here. I actually may end up taking a long trade on Snap in the morning for about 30 days. Speaking of that, while we're here, let's talk about time frames. So generally, if you're playing this with shares, you can just buy them, hold them, set your stops below the original consolidation. So you can get in this area here. And while that momentum is increasing and you already know your trend is up, you could buy in here after about 4 or 5 dots and just wait and hold it. With options, you can't really do that. So options, you need to be monitoring and watching, but you still need to give yourself plenty of time for this squeeze to play out. So you're on a daily chart, buy options at least 30 days out. I like to buy the at the money or one place in the money, somewhere between delta 60 and delta 70 options. But you figure out how you want to play that yourself. I guess a lot of it's going to depend on your risk tolerance and your own personal account sizes. We already looked at this one. Here is, and this works on any time frame, pretty much exactly the same. And we'll go look at some hourly charts just while we're here. Let's look at 4-hour charts actually. You can see. Ooh, that's not quite much price action there. Let's do 90 days, 4 hours. There we go. You can see the squeezes still work on any time frames. The signals are the exact same. Here is a nice low volatility Bollinger Bands inside the Kellner channels, and then that squeeze starts to fire off. It looks like it's going to fire off up here, but then if you can look at your other price action, you notice you are in a downtrend. So it could be an indication here that when this breaks this level, it's going to fall quite rapidly, and it does in just a couple of bars, right? The bottom falls out of this thing. And then of course down here you start to get your momentum to turn back the other direction. You've got earnings coming up. You could jump out here for a nice profit in just a couple of days here. Currently in another squeeze, but as you can see, these squeezes do fire off quite often, and sometimes though it does take them a long time to fire. So you need to, I like to mark these boxes and just watch, and then when it finally does start breaking out, you remember you've got 8 to 10 bars of following, so you don't have to get in the exact same day, that thing. But there are times that a squeeze will fire off, like here. If you weren't watching this immediately, this bar will close well into the move. I would avoid things of this because that move could possibly already be over. That's a huge move. Or wait for a pullback back to your channels and then jump in afterwards. Of course, here we're going to ignore the fact that there's earnings. Alright, let me show you how to scan for these. So I have a couple of scanners here for the squeeze, and I'm going to load. The very standard squeeze is super easy. It's just, I just have average volume, greater than 150,000. TTM squeeze scan, and close is greater than $1 within 2 bars. Right? So all you do is click add filter, and the only one here, study volume for your average volume. Click that, and then you type in whatever average volume you want, and then for the squeeze, click on edit, edit this, type in, ooh, never mind, hold on a second, there is a popular study for the squeeze. Should be, let's find it. Popular studies. I actually can't find it. Okay, well let's just do it custom. Click on custom, edit, type in study, TTM squeeze, click that, as value, and then save, and you're done, right? I'm going to cancel that because I already have this made, and then click scan. This will show you all of the stocks in your criteria that have traded today that are currently in a squeeze, right? So we can save this as a watch list, and I'm just going to save it currently as a whole bunch of zeros and a 1, so it'll be at the very top. And then we'll go through, go to that watch list, and these are going to be all of your squeezes on a daily time frame, right? See, this says 1 dot, and you can put these on your watch list and continue watching them. Find the ones that you like, add them to a separate watch list so you can monitor them, right? See, here's a very good squeeze that just happened recently. Nice period of low volatility. Bollinger Bands inside the Keltner channels. Squeeze fires off. Momentum is increasing. If you had gotten in on either of these 2 days, you would have made a very nice profit off of this squeeze. But if you notice, we are currently in an uptrend. We've pulled back to the lower end of these channels and have been consolidating for a while. Momentum is steadily increasing, and that squeeze fires off, and boom, lots of money. These are the best squeezes here. Uptrend or downtrend, and then you get a nice little pullback into a consolidation. So it's flagging, right? It's a flag. And then squeeze fires off, continues the direction of the trend, and 8 to 10 days later, momentum starts to top out and decrease, and that is when you would exit. Right, so that's the first scan, and then in order to change this to an hourly time frame, you just change that one thing right there to 1 hour, 4 hours, 1 week, 1 month, whatever you want it to be. Now, the other TTM scan that I use is something a little different. Go ahead and load that. And I call it the stacked TTM squeeze. So, the only thing that's different here is this one custom study. So add study, right? And then you click this edit button, and I'll show you this study. So all this is the 55 moving average is greater than the 89 moving average, and these are all Fibonacci numbers. They're the same Fibonacci numbers that John Carter uses for his scanners. You want to learn how to use an indicator, do the same thing the guy who created it, right? 55 moving average is greater than the 89 exponential moving average. So to do that, you just click here, type study moving average exponential, right? Study exponential moving average 55. And it's the exact same thing on this other side, is greater than, right? I'm going to cancel that. And then you got the 34 is greater than the 55. And then finally, you have 55 is greater than the 89. And, sorry, I already went through that one. The 8 is greater than the 21, right? So all this is going to do is find stocks that are currently in an uptrend. In order to do this for a downtrend, you just swap those numbers. So instead of greater than, it would be less than, right? Click scan. This is only going to find things in an uptrend. This is going to be a much smaller list. Actually, this is a quite large list. So let's save this again. I'm going to, once again, we'll do this one 0002, right? So what you're going to find here is stocks in an uptrend. As we see here, daily time frame, uptrend. Here's a squeeze it's already fired off. Same story. Look, one of these good squeezes I'm talking about. Nice uptrend. Pulls back into a flag, goes into a squeeze, and then fires back off in the direction of the trend. 8 to 10 bars later, momentum starts to decrease. Boom, that's a perfect squeeze. And if you didn't catch the first exit, you get a nice double top kind of here to save the day, right? Same thing. This one has just started squeezing again, so if you want to, add this to your watch list. Another story here. See here, this price action is choppy. This is not a good squeeze. It does end up making quite a decent bit of money, but choppy price action does not make for good squeezes. Same thing here. I would just completely ignore this one. Again, choppy price action. Ignore this one. Here you go. Here's a good squeeze. Uptrend, flag, boom. And it's starting to possibly look like it may flag again and trade sideways. If this trades sideways for a while, starts to flag again here, boom. Nice squeezes. Sideways price action, ignore this one. Here's another decent stock. Not quite as clear as the other ones. Nice overall trend is up. Here is a nice squeeze from prior that did fire up. This one could possibly be reversing, so I would probably ignore this one as well. This is a perfect candidate for a squeeze. Overall trend is up. It's already started flagging a bit here. Now what we want is for this to move sideways for a bit, volatility to contract, right? Compressed volatility, starts to squeeze a bit, and then we're looking for that squeeze to fire off in the direction of the trend. So I feel like we've been through plenty of examples. We've talked about the squeeze, we've showed the scanners, we have basically showed you how to build the squeeze from its individual indicators, Bollinger Bands, Kellner channels, momentum, and that's pretty much all there is to trading the TTM squeeze. Combine this with your trend lines and your other candlestick patterns, your double bottoms, your double tops, and look for trending stocks that have flagged into possibly, boom, another nice trend continuation move. And if you have any questions, post them in the comments below, and I appreciate you guys watching. Cheers.